How's it going, everyone? Welcome back to another Injective update. Please, before we start, could you help me achieve 8k? I think we can do it in the next day or literally today or tomorrow. We're about 50 subscribers away, so keep liking, keep commenting, subscribing and sharing these videos if you can with your communities. So over here for Injective, we have set out this level of support. And why is this important to me? Because this was a daily candle that had lost the 55 daily EMA and then set this new low. The bulls stepped in from this point and helped, of course, Injective retain this 55 moving average, maintaining the uptrend, essentially giving it another opportunity to reclaim the 20. And we can see when the price action is above the 20 moving average, we go higher and higher and higher. So of course it got above it here, but we couldn't confirm its support. We need to confirm it, and then we do break this high eventually. Unfortunately, it didn't happen. However, why is this important? Because the bull stepped in from here, so I need to mark that out and realize that that is a level of support. Although we know it's the 55 that needs to be maintained, this becomes important because eventually 2 days later we close the day out beneath the 55, and so we would now assume we're going to continue lower. But this is wrong because of this wick over here. As we created this wick, it's now we now need to essentially lose that as well for bearish continuation, and then we got another level of support here, so that would be an area where we bounce from anyways. But we didn't manage to lose that low, and that's what allowed the reclaim, a bullish engulfing followed by the break through the 20. We just couldn't hold its support, and then the same thing has happened again where we've lost the 55, and we would then obviously assume it's coming down to the 200 EMA. But as there is still that wick that's beneath all the price action, all this price action is above it, and so we have not yet made lower lows, and so for that very reason this could be a potential double bottom that is occurring in this area, and the resistance that we felt over here becomes our neckline, giving us a potential bullish move with a price target that should take us back to this previous high over here on the left at $45. So I'm just going to get you the price target out of this double bottom over here and realize that we must bounce from this location, reclaim the moving averages, and then actually close a daily candle above $37 to validate this path that will eventually take us higher than the all-time high. Guys, it's not too dissimilar to what the Fibonacci retracement tool is saying. I've measured this push up. We should actually come back down to the golden pocket, which is right over here, and maintain it. It should give us a bounce that of course reclaims the moving averages and takes out this high, and we fell beneath that point of support, flipping it into resistance. So if we ever reclaim it, we're back on that original bullish path that will break this high, and we've now formed a potential bullish pattern as long as this low holds, and then of course reclaim the moving averages before a bearish cross forms, which is called an EMA repel. And when an EMA repel forms, it's because we form a slingshot motion up like this, fall back to it as support before a bearish cross. We do not want a bearish cross here. It hasn't yet been confirmed, and when we see that signal, that's a signal where we start to target the 200 EMA. Of course, if this range low is lost anyway, we target these three targets over here, and we've got the 200 EMA suggesting that this dump is corrective it's a bearish phase of an uptrend, and this would be the bottom, the 200 EMA, or at least the lowest possible point of this uptrend. But we can bottom before that point. Again, we've lost the moving averages. That would usually suggest we do continue lower. Are we though? No, because we're holding this low over here, that very important wick at the price of $30. So just use the psychological level of $30, and as long as price action is holding daily candle closes above $30, then eventually we will turn around, and hopefully this turnaround comes before a bearish cross happens. I think that we'll get that in the next couple of days. We need to see if we can, if it rejects here again, then it's going to try and come down. So we need to push through the 55 and the 20, or even if we get trapped in between, that's totally fine. As long as the 55 becomes support, we break out, and then of course taking out this neckline, validating the double bottom, reclaiming those original Fibonacci levels, the golden pocket, to go on that original bullish path with our target already being prepared for us, and that's beyond the high over here. So if this is actually truly the bottom right now, I could then look for targets beyond this double bottom one over here. So that would be anywhere between the price of $50 and $60 as our next target. Once this whole area is flipped into support, let's just say once if we manage to get up to $60 and we get rejected and fall back to 50, as long as 50 then holds, we could be looking at a $67 to $80 Injective, which is very close to our target of $89, which is a target that I gave you all totally for free over here on the channel, and that's why you need to be subscribed, and we're just under 50 subscribers away from 8k. Also, if you want me to teach you any of this, then I have multiple things in place, whether it's a community with weekly group calls, whether it's an ebook to do in your own time, a course to do in your own time, or one-to-one mentorship where it's just me and you. So use the links down below if you are interested. I do have exclusive offers at the moment, and you'll definitely learn how to do this. This is just a basic pattern over here, but that is this inverse head and shoulders, and we pair it with the fibs and some other indicators like this down over here as well to give us further confirmations of our bias. And when the 200 EMA appeared and was confirmed as support, it was all the way back over here in August, September, October time, where we were calling for this inverse head and shoulders breakout, and I was getting absolutely laughed at. But look at how deep into it we are right now, guys. We were calling it from about down here, but imagine just from the breakout to current price, it's 260% up and was 400% up. Sorry if you can hear my dog, Abby's just got home. So that's it from me today. Like, subscribe, comment, share. Check out the discounts on the website, links down below, and enter the giveaway on Twitter.